Today, let us discuss one of the important topic, that is subsidiary books. These subsidiary books, also called in the name special journals and also splitted journal. That means the total journal is splitted to record a similar type of transactions. That splitted journal we are going to call in the name subsidiary books. There are total 8 subsidiary books. So we are going to see that one by one now. The first one, purchases day book or purchases book. So this book is maintained to record credit purchases of goods only. Goods are that things which are purchased for the purpose of resale. To record credit purchases of goods only, we are going to maintain a subsidiary book which is called in the name purchase day book. This purchase day book or purchases book looks like this. There will be a date column to record the date of the transaction, name of the supplier and details of the goods purchased, that we are going to record here. That is, who is supplying the goods on credit and what goods we purchased at what quantity and what is the rate per good, that details we are going to record here. Then invoice reference, the number and date of invoice we are going to record here. Then ledger folio, total amount of the transaction and any further information regarding this credit purchase of goods, that we are going to record in remarks column. Next, purchases outward book or return outward book or purchases returns book. So different names we are going to use here. Whenever the goods which are purchased either on cash basis or credit basis, to record the transaction, one book is maintained which is called in the name return outward book or purchases returns book. That goods may be returned for any reason, that goods are broken in transit or not according to the sample or whatever. Whenever any goods which are purchased either on cash basis or credit basis, to record the transaction, a book is maintained which is called in the name purchases returns book. That looks like this. There will be a date column, there will be particulars, that is to whom we are returning and what we are returning. Then debit note, what is this debit note? Let us see in the next slide. Then ledger folio, then details of the goods what we are returning, then the total amount and any further information regarding this return of goods. Now let us see the meaning of debit note. Debit note, whenever there is purchases returns, this debit note is created. A debit note is a documentary evidence, a debit to be raised against a party for reason other than credit sales. It indicates that the person's account has been reduced to that extent of value mentioned in debit note. Normally, this is prepaid by the debtor, that is credit purchaser, and sent to the creditor, that is the person who is selling the goods or services on credit basis. Next subsidiary book is sales day book or sales book. This book is maintained to record credit sales of goods only. The cash sales of goods and credit sales of other than goods, we are going to maintain some other book. So sales day book or sales book is maintained to record only the credit sales of goods to the customers. So it looks like this. So there will be date column to record the date of credit sales of goods, particulars, that is to whom we are selling the goods on credit, and the details regarding the goods, the quantity, the rate, that also may be mentioned here in particulars. Then invoice reference, invoice number and the date. So what the business is going to prepare in the name of that person who is purchasing goods on credit. Then ledger folio and the amount of this transaction and any other further information regarding this credit sales. This is the format of sales day book or sales book. Next one is return inward book. It is also called in the name sales returns book. Whenever there is credit sales or cash sales, the person who purchased the goods, if he returns any of the goods to the business back, to record that transactions, a book is maintained which is called in the name returns inward day book or sales returns book. It contains the following details, that is the date of the transaction, the particulars, that is the person who is returning the goods, then outward invoice number. Actually, this is not outward invoice number, this is credit note number. What is this credit note? Let us see in the next slide. Then ledger folio, then details of the goods, what is written by the buyer, total amount, then any further information regarding this return of goods. Next, this credit note. Whenever there is sales returns, a credit note is created by seller and sent to the same to the buyer of goods. Credit note is a documentary evidence for when a party is to be credited for reason other than credit purchases. This credit note indicates that in whose name credit note is created, his account has been credited to that extent of value mentioned in credit note. Whenever there is credit sales, the person who purchased the goods on credit, his account is debited. Now, because of the sales returns, the same person's account has been credited to that extent value, so that the balancing figure indicates what is the total amount receivable from that particular buyer. So that note we are going to call in the name credit note. Now one more subsidiary book is bills receivable book. So this bills receivable book maintains that particular transactions are recorded, that transactions in connection with bills of exchange. Whenever there is credit sales, a promissory note or a bill has been created in the name of that particular buyer by the business, which indicates the basic details and what is the amount payable on what date and to whom it is payable. So that documentary evidence we are going to call in the name bill. On the basis of that bill, the business has to receive money in future on a particular due date. That's why that bill we are going to call in the name bills receivable book. To record that type of transactions, a book is maintained called in the name bills receivable day book or bills receivable book. This book contains the following columns, that is number of bill, so 1, 2, 3 serial numbers, then date of receipt of bill, so on what date the acceptance has been given by buyer to this particular bill, that and when it is actually received, that date we are going to record here. From whom we are receiving this particular bill, is it from the actual acceptor of the bill or is it from any other person, that details we write here. Then name of the receiver to whom this bill, if the same bill has been given to some other person for settling some amount, so that person's name we are going to record here in name of the receiver. Then name of the drawer, the actual creator of the bill, his name is written here. Then name of the acceptor, in whose name the bill has been created and who has given acceptance to pay the value in future, that person's name we are going to write here. Then the date of the bill, and this is the due date. So here in calculation of due date, one point we need to keep in mind, that is Now the date of bill is 1 4 2021. Now this is for 3 months. Let us take example. Now April, May, June. Okay, 1st July 2021 is the actual date, but here 3 days extra is given as grace period. Now the date become 4 7 2021. Like this we are going to identify the due date, then ledger folio, then the total amount of bill, and how this bill has been disposed of. If the bill has been paid on the due date, or if it becomes a bad debt, what happened to this particular bill. To record that details, this column is used. This is bills receivable book. In the same manner, bills payable book. Whenever there is credit purchases made by the business, the creditor who is supplying goods and services to the business, that person is going to create a promissory note or a document in the name of the business, which indicates so what is the total amount payable by the business on the due date. Okay, that document we are going to call in the name bills payable. This is created by the creditor, acceptance given by the debtor. Here debtor is the business, creditor is that person who is supplying goods and services to the business on credit. Okay, in future business has to pay money to that creditor. To record all the details, we are going to maintain in our business one subsidiary book, which is called in the name bills payable book. That bills payable book contains these details, that is name of the bill, that is number of bill 1 2 3 4, then date of acceptance, when the date on what date the acceptance has been given to this particular bill, to whom the acceptance has been given or the bill has been given, who is the actual drawer of this particular bill, and name of the payee, to whom the money to be payable on the due date, to the person who drawn the particular bill, or the person name who is mentioned in the bill to whom the value to be payable. Okay, that we are going to record here in this column. Then where payable, the place, is it in a bank or is it in a particular place, Bangalore, Bombay, whatever, that we are going to write here, where payable column. Then the actual date of the bill, and what is the term, is it 2 months or 3 months or what. Then calculation of the due date, that is the term, date of the bill plus term plus 3 days, adding 3 extra grace days, the due date to be calculated. Then ledger folio and amount of the bill, and how disposed this particular bill on due date, is the amount is paid or not, if paid in what form it is paid, if it is not paid the reason, and what action is taken by that particular drawer. All the detail we can record in this particular column. So this is bills payable book. Now one more, that is journal proper. So journal proper, which is almost similar to a journal only. In the form of passing journal entry only, we are going to record the transaction in this. So if any of the transactions which is not possible to record in any of the other subsidiary books, out of 8 subsidiary books, in 7 subsidiary books, if any transaction is unable to record or not possible to record that type of transactions, we are going to prepare or maintain a book which is called in the name journal proper. So in the form of passing journal entry, we are going to record the transactions in this. For example, credit purchases of asset, so depreciation charged, like this, these type of transactions we are going to record in journal proper. Now the most important one, that is cash book. So a cash book is a special journal which is used for recording all cash receipts and all cash payments. Okay, all type of cash receipts and all type of cash payments. To record this, one book which we are going to maintain is called in the name cash book. Okay, so this receipt of cash received by any person, received for any reason, received for any period, either for the past or for the future or for the present, we are going to record under receipt side. And all type of payments made to any person, any amount, any reason, any period. If you are actually making the payment of cash, that you are going to record under payment side of cash book. So all cash transactions which are going to happen in the business, to record the transactions, a main subsidiary book maintained which is called in the name cash book. So a cash book plays a dual role as cash book also and cash account also. Okay, so after doing some problems we come to know about this. Now there are some types of cash book. So what are that? Let us see that. The first one is single column cash book. That means, so in cash book, two sides, left hand side or right hand side. So left hand side we are going to call in the name receipt side, and right hand side we are going to call in the name payment side. Okay, either side which consists only one column for recording cash. This is the pro forma of single column cash book. So this is receipt side, this total this much, and this much is payment side, two equal sides. Either side we have only one column for recording the cash. This is called single column cash book. Now double column cash book. The name itself suggests what is this double column. Both the sides, receipt sides and payment side, we find two amount columns. That two amount columns may be one for cash and discount columns, one for cash and bank columns, and one side for bank and discount columns. Okay, two column cash book means both sides, receipt side two column, payment side two column. In the two columns, one column for cash, one column for discount, or one column for cash, one column for bank, or one column for bank and one more column for discount. So if nothing is told, only two column cash book or double column cash book, it means that columns for cash and discount. Okay, that looks like this same. So both sides, that is receipt side and the payment side, two sides. Okay, receipt side two column, one for cash, one for discount allowed. When we are going to receive money, we are going to allow discount to our debtors. And right hand side or payment side, two columns, one for cash, one for discount received. When we make payment to the creditors, they may allow us some discount. In that time business is receiving the discount. Okay, so to record that discount received and cash under payment side, when we receive and we allow discount, to record that under receipt side. So this cash book which consists two columns, both sides, that we are going to call in the name two column cash book. Next one, it is triple column cash book or three column cash book. Again same meaning, both sides in this cash book. Okay, let us see here. So left hand side or receipt side, we are going to find three columns, one for cash, one for bank, one for discount allowed. In the same manner, under payment side also we are going to find three columns, one for cash, one for bank and one for discount received. So this type of cash book which consists three columns under receipt side also and also under payment side, that cash book we are going to call in the name 3-column cash book or triple column cash book. Then some more classifications we can find, that is multi-column cash book having multiple columns on both the sides. So other than these 3 columns we may maintain some more columns also according to the requirement, but that type of cash book normally not maintained in many of the business houses. Next one is the petty cash book. Petty cash book, a part of cash book. There will be 2 cash book maintained, one main cash book, one more petty cash book. Here to record small amount of receipts and small payment of cash, we are going to record one more book which is called in the name petty cash book. Under receipt side we are going to record small amount of receipts. Under payment side we are going to record small payments, okay, which are of little value like 10 rupee, 15 rupee, 250 rupees like that. So that cash book we call in the name petty cash book. In this petty cash book one more variety is there, that is analytical petty cash book. For each and every expenses we are going to create one respective column under payment side. For example, printing and stationery, okay, traveling expenses, okay, like this type of small expenses we are going to maintain a separate column whenever there is huge transactions in connection with that. So that type of petty cash book we are going to call in the name analytical petty cash book. Okay, so in this semester mainly we are going to discuss the cash book. Okay, single column cash book, 2-column cash book, triple column cash book and petty cash book. Now let us see some more details about this cash book. Is the cash book journal or ledger? So we already discussed cash book plays a dual role. It is can be considered as cash book also and cash account also. Anyway, it has 2 sides, left hand side or receipt side, right hand side or payment side. So cash book also look like this and cash account also look like this, only one change. So left hand side we write debit, right hand side we are going to write credit. So cash book plays a dual role. It is journal also and also a ledger. Then contra transactions. This is one of the important thing which is going to happen whenever there is 2-column cash book of bank and cash, or 3-column cash book of one for bank, one for cash and one for discount. In that time transactions takes place in connection with bank and cash, and like cash is deposited into the bank or cash being withdrawn from bank to the cash box. Here cash is not going out of the business, okay, the place is just transferred from bank to cash box or cash box to bank. A single transactions we are going to record both sides, under receipt side also and under payment side also. For one single entry we are going to record one in cash column, one in bank column, or one in cash column or one in bank column. So this type of transactions we call in the name contra transactions or contra entries. This happens in 2-column cash book with cash and bank columns, or 3-column cash book with cash, bank and discount columns. Now check transactions. So whenever any payment made in the form of check, so that we are going to record in bank column of the cash book. whenever any receipt made in the form of check, again that also recorded under receipt side in bank column. Okay, so that is in connection with check transactions. So these are the basic information you should know about the cash book. In the next session, we are going to start the problems on the cash book. Okay, so write down all this information, understand, and next class let us start this cash book.